Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is John Macielag, and he is the president and founder of All Seasons Capital Advisory. John, welcome.
Thank you. Thank you, Gary.
So John, what made you decide to get into finance and advisory role?
Basically, I started when I was in my early 20s, 22, 23, when Merrill Lynch hired me. And I just liked working with people. I like business background, a corporation finance background, and so forth. But I like working with people, liked working with money and business and success, helping people achieve success. I came from a stint with an unrelated industry in construction. And so I was around business owners and so forth and saw how business works. And it was very of interest to me. Basically, a high-level manager at Merrill Lynch in downtown Baltimore was looking through trade journals, looking for people to interview, and he came across my name in a trade journal, construction trade journal, because I'd achieved a milestone or achieved a level of success with the fastener company I was working for, and he was looking. He invited me in for an interview, and what do they say? The rest is history.
Right. So, what is it about it that in the morning that kind of gets you fired up and wanting to get in the office and talking with people?
Oh my gosh, that's a great question. It's thinking about our clients and their goals and ambitions and dreams and objectives, and thinking about what's happening now that's pertinent to them achieving their goals and objectives, and what we can do today to work on that.
So you talk about your clients' goals and things like that they're trying to accomplish. What are some of the common mistakes that you're seeing people make that stop them from being able to reach those goals or take longer to reach them?
Let time go by with inaction. And what I mean by that is, we all know what the time value of money and the compounding effects of money and the dollar cost averaging concepts. And we can get into those in more detail, but that's the biggest hindrance is people not making a decision to take action, to move forward, or having paralysis by analysis. And in many cases, it's because of not having the right partner that says, this is what I've identified about your situation. Here's what you can do. Here are the steps to achieve your solution.
Going through many business owners, to them, cash is king. They want to hold on to their capital as much as they can, which I think sometimes precludes them from taking that action that you're talking about. How do you help them calm that angst of letting go of their cash and investing it and making sure that they understand it's still there?
That's a great concept. One of the ways we do that is sometimes we look at their payroll, their cash flow, and their cash flow analysis. We look at what we call the census of their organization, the statistics, the demographics around their workforce, and what's their payroll look like, what's their cash flow relative to payroll. We take in the demographics data in terms of what stage of life their employees are relative to the business owner and all the dynamics there. And we call that the census data. And we kind of drill that down and show the business owner, if you add 3% or whatever percent to your payroll expense, this is what it's going to do for that money. We can set up a defined contribution retirement plan, for example, and direct that additional payroll expense into the defined contribution. Oh, and by the way, here's the number that's going to go into your account out of that. So sometimes you would just have to break it down into dollars. Can you afford this additional payroll expense, if you will? Oh, and by the way, 50%, 60%, 40% of that money is going to go into your account for the future. How does that sound to you?
Right. And I guess helping them lay out the roadmap that you help them lay out. What are some of the things that you guys do differently at All Seasons that other advisors aren't doing?
We really focus on knowing our client. We drill it down. We try and know our client in all aspects of their lives, obviously primarily financial, but some of the intangibles in terms of understanding them. And my colleague Katie, she's really good at discerning things that I might miss, and I'm pretty good at discerning things that are concrete in terms of the dollars and cents. We try and work hand in hand and have conversations with the clients jointly, and then we confer afterwards, and it'll come out what I missed and what she picked up on and so forth. And so we try and have a holistic approach in that way, and also really listening, keeping our ears and eyes open. I mentioned I came from a construction or manufacturing related background prior to becoming a financial advisor many years ago, but we spend a lot of time. Most of our clients are small to medium sized, closely held businesses, and the key people that control them. So we try and go to their business, the manufacturing company, the machining company, the engineering firm, because in many cases the business is the owner's closest. It's like their family. So a lot of times we go and see the business and look around and understand, and you really elicit a lot more understanding of knowing your client when they're showing you, their 5-axis machining center or the lathe that they're making the newest parts for one of the big defense contractors or something. And they're proud of that. And you understand the capital they had to put in to make that venture work, and the return on that capital, the return on that investment through their business. And then you can relate to them on their terms.
Right. How do you work with their other advisors, being their attorneys, their CPAs, insurance brokers, et cetera?
Yeah, hand in hand as much as possible, particularly the CPAs and the attorneys. We want to be working in concert with them, collaborating, and also playing devil's advocate with each other in terms of the attorneys and the CPAs, helping the client, working together. And that's, a big part of tax planning now and in the future, current tax planning, future tax planning. And so we don't give tax advice. So we work hand in hand with the CPAs to do that, but it's all related. We've all heard the saying, it's not necessarily what you make, it's what you keep. And that's very true. So we, are very strong advocates of working hand in hand with the CPAs and the tax attorneys and the other advisors who are valued to the client.
Right. Tell us about one of your success stories.
And also not just tax estate planning attorneys and other specialty attorneys, corporate attorneys in terms of drafting documents and doing things relative to the business. And then we many times integrate that into, how this is how now the money needs to flow along with those provisions that you've created. Sorry, success story. Gosh, number of them, but I'll give you one that goes way back. This situation started in about 1998, and it was a group of engineers. It was a group of engineers, and they were involved with a industrial design company that was kind of falling apart. It was basically ready to go out of business. They saw all the writing on the wall, and they decided they needed to leave and form their own company. There was one visionary who was he was the visionary, and then there was some younger engineers who were just great at what they did in terms of engineering and so forth. And he was kind of the leader and had all the engineering expertise for many years, but he also had some charisma and the ability to lead. And so they started their new company. I started working with them and advising them. We started with the basics: business cash management, commercial real estate finance, because they wanted to buy their own building, and business lines of credit. And then as the cash flow started going well, we set up and managed their 401k plan. And then as they grew and became more successful, we got into more sophisticated investments and additional vehicles and asset classes, in addition to and over and above the defined contribution plan. And then so the years went by, and they created hundreds of patented designs, several of which became blockbusters. And eventually a much larger vendor who they were buying belting, a commoditized product, noticed that their sales were just going to this little company in Maryland was going up and up. Every year was like almost growing exponentially. And so they sent somebody who said, we got to understand this. We got to see why are they buying more and more of our belting every year. And so they sent someone out and they saw that there were these two patents that the visionary in the group developed that took this commoditized product and made it one of a kind. And so this larger vendor said, oh my gosh, we have to own this company. At first, our clients were like, we're not selling. We'll do whatever. We'll joint venture. We'll work on projects together. We'll collaborate, but we're not selling. We stayed involved. We acted as a sounding board with each overture by the larger vendor. There were a number of proposals of outright acquisition and then royalty agreements. We basically advised our client for their financial well-being and outlook. Ultimately, a purchase and sale agreement was agreed upon with a 10-year royalty stream and employment contracts for all of our guys, all the founders of the firm. And I'll never forget, he called me into his office and said, you got to come read this employment contract that they're offering me. And I went in and I read it. And I said, this basically says you can do whatever you want to do. You can walk out the door tomorrow if you wanted to. This basically said, he says, I know. Why would they do that? I said, because they know you. They've observed you. They've watched for the last 4 years. They know it's not in your DNA to walk out the door. This business is your baby, and they know that you're not going to give up on it. So we just stayed involved, played devil's advocate, looked out for our clients' best interests the whole way. And then we helped manage the liquidity events, the initial liquidity event. And then there were liquidity events literally every quarter as these royalties paid out. And the business continued to grow exponentially because of these patented products or these patented designs that took these commoditized products and made them one of a kind. And with the big company involved, they were able to distribute globally. We just continued to stay involved. And to this day, our indispensable involvement with these clients and their families continues.
That's awesome. That's great to hear, when somebody, especially a local company for us, does well. That's for sure. What advice would you have for, a business owner who's just kind of starting out, that doesn't necessarily have a professional like you, on their team yet? What advice would you have for them on picking someone to be in that role?
Interview them, meet them in person, see how well they understand your business when you explain what your business is about, and gauge the kind of questions they ask you and see if it's a good fit, philosophically, personally. Get to obviously their credentials, make sure they are accredited in the various areas of expertise. It's good to have an advisor who understands the defined contribution and the defined benefit savings and investment arena, the 401k, the 400 series, an advisor who understands the 400 series of the Internal Revenue Code pretty well, because that's key. It's one of the few remaining areas where businesses, small to size, closely held businesses can stockpile, save, invest, shelter money from taxation for the future for themselves and their families. And utilize those, make sure you have an advisor that's well-versed in those resources and understands cash flow, can read an income statement and a balance sheet, and can understand how your business makes money and where to go from there. I often say when I do a lot of 401k enrollment and participant education meetings, because again, the business is very important to the business owner. So having your professional advisor come in and speak to your people is like, having them speak to your family. And for most American workers, your employer sponsored qualified retirement plan, your 401k plan, is the best opportunity that the most American workers are gonna have to save and invest, to have wealth for their families and the people they care about for the future. So that's integral to the business owners planning for the future, at least financially.
Right. So, John, what have I not asked you that you wish I had? And I'm sure there's a lot to cover still, but
um, I don't know. How do we work with corporate executives? What about short-term situation, short-term goals, long-term goals? How do you integrate those? That's probably that's a challenge. It's always the big, one of the biggest challenges is clients say, yeah, I want to have retirement security. I want to have money down the road that I can live off of. But I'm spending everything I have right now. I'm a business owner, so I'm spending everything I have right now.
yeah,
Okay, well, let's back that up. Are you fully supporting your current cost of living with current income? And does that include some built-in savings like 401k contributions or something, some sort of defined contribution? And then, what do you think is reasonable to the clients? What do you think is reasonable for a spendable lifestyle, down the road? If most of your assets are tied up in your business or associated with your business and you're deriving your income from the business, what do you think is reasonable to have an income stream down the road? And I often tell clients in my 30 plus years experience, I've never had clients retire and willingly spend less in retirement than they did while they were in the career world. And a lot of times clients seem shocked at that,
right,
but it's willingly is the key word.
right, right. In there, you talk about, long-term goals and the short-term goals and stuff like that. Is that something that you work with the business owners in trying to help them create?
For sure, for sure. Identify conversations, discussion back and forth. Really, sometimes they'll tell you outright, but more often than not, you sort of have to kind of pull the information out in conversation and discussion and to get a clear picture of where they are now, where they are both on paper, in reality, but where they are in their head in terms of current situation, current day-to-day goals and objectives and day-to-day business management and lifestyle management, and then kind of extrapolate what are their downstream goals and objectives for themselves, their families, the people they care about, that sort of thing. And you sort of have to build a roadmap with them.
Right, right. I find lots of times with the business owners, we got to do a lot of hand holding, especially at the beginning to get them, where they need to be. Because many times, I'm going to say they're not sure what their short-term or long-term goals are.
That's right. That's
We
right.
gotta help them develop them.
Yeah, that's right. That's right. And sometimes you have business owners that obsess over the day-to-day, and that's not a bad thing because it's what ultimately will make them successful. In the success story that I told you, I can remember early on the visionary, the top guy who was the visionary. They were struggling.
Right.
And I was with a big firm at that time, and we had a commercial lending division, and they had a material sized loan with us, and he would produce a report every week where he would show bookings, billings, work in progress, and I mean one other, and it was like detailed. Every week he produced this report, and he would send it to me, and I would send it up to the credit analyst. And finally, the credit analyst called me one day and he said, stop, don't send this to me anymore. Because if you send it to me, I have to book it. And I can clearly see that this company, these people, as much detail as they're paying attention to, they are not going to fail.
Right.
So we're not worried about our loan anymore.
Right. Right.
And they did, and they succeeded. So I never underestimate the importance of paying attention to the details to the business owner. My conversation, business owner. Never underestimate the importance of paying attention to the details. What did Benjamin Franklin say? If you take care of the pennies, the dollars take care of themselves.
Right. Right.
And so we don't ever discount their focus on the day to day, but then we try and ease them into the longer term planning as well.
Right. Great. So, John, if people like what they hear and they want to reach out to you, talk to you, get to know more, about you and All Seasons, how can they reach you?
Okay, sure. So our phone numbers are 667. We're in Chestertown, Maryland. We're based in Chestertown, Maryland, on the Eastern Shore, but we travel all over. We have clients all up and down the Middle Atlantic and beyond, well beyond. So yes, 667-319-2050 is the main line. 2052 is me. 2054 is Katie. 2055 is Emily. 2053 is Jack. So 667-319-2052 is my line again. And then it's John at All Seasons Cap, Charlie Alpha Papa, ADV.com. John at All Seasons, plural, followed by Charlie Alpha Papa, Alpha Delta Victor.com.
Great. John,
Easy.
I really appreciate your time today. Appreciate your wisdom. I think that our listeners have definitely got something to think about, especially, if you guys are out there looking for that's going to help you and grow with you. Listen to what John's words were, because I think it's really important. John, I appreciate your time.
Thank you so much, Gary. Thanks for having me.
Sure. Hey, this week our guest was John Macielag, and I will see you guys next week.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.